The French stock market is officially bleeding. In fact, to make the top 10 list this month, you actually had to lose money. Today, we are looking at the best of the losers on the CAC 40 and the one single stock carrying the entire market on its back. Hello, everyone, and welcome back to the channel. We are continuing our global market series, and in this video, we are looking at the French CAC 40 index for the first 3 weeks of March 2026. The Middle East crisis and spiking oil prices have sent European markets into a tailspin. But in a sea of red, not all losers are created equal. Let's count down the surviving 10. Numbers 10 through 7. The margin squeeze. Coming in at number 10 is advertising titan Publicis Group, down 7%. When geopolitical panic hits, corporate ad budgets are the very first thing to get slashed. Just ahead of them, we have a three-way tie with Air Liquide, telecom giant Orange, and consumer staple Danone, all dropping 6%. What is the catalyst here? Margin compression. With crude oil spiking, transportation and packaging costs are skyrocketing. For a company like Danone, every extra dollar spent on freight is a dollar ripped straight out of their profit margins. Investors are repricing these steady compounders for a high inflation environment. Numbers 6 through 4. The supply chain panic. Moving to the middle of the pack, we have healthcare leader Sanofi, semiconductor manufacturer ST Microelectronics, and grocery giant Carrefour, all bleeding 5%. The story here is pure supply chain panic. The disruption at the Strait of Hormuz isn't just about oil, it's about global logistics. Whether you are shipping microchips or stocking supermarket shelves, European supply chains are heavily exposed, and the market is aggressively pricing in those delays. Number 3. The Defense Anomaly. At number 3, we have the most fascinating stock on the list. French defense contractor Thales, also down 5%. Now, wait a minute. We just saw UK defense stocks like BAE Systems hit all-time highs because of the war. So why is Thales down? Because European defense contractors are struggling with severe supply chain bottlenecks. They have the orders, but the market is heavily discounting their ability to source raw materials and actually manufacture the tech fast enough. Number 2. The house always wins. Coming in at number 2, and officially the best of the losers, is the stock exchange itself. Euronext, down just 3%. Why are they outperforming the rest of the bleeding market? Because volatility equals volume. When retail and institutional investors panic sell their portfolios, they still have to pay transaction fees. The exchange acts as a massive shock absorber during a crisis. Number 1, the one-man show. And finally, the number 1 performing stock on the CAC 40 for March 2026. The only company actually making you wealthy right now, TotalEnergies, ripping higher by a massive 14%. You don't need a PhD in economics to figure out the catalyst here. With the conflict raging and crude oil surging, TotalEnergies is experiencing a historic profit windfall. While inflation and fuel costs are crushing the other 39 stocks on the French index, TotalEnergies is weaponizing the crisis, printing cash, and serving as the ultimate portfolio hedge. Right now, they aren't just a stock, they are the French market. So, the next time the market turns red, don't just look at the index, look under the hood. Understanding why certain sectors bleed while others surge is how you build a bulletproof portfolio. If you found this breakdown helpful, hit that like button, subscribe to the channel, and let us know in the comments. Are you buying the dip on these French blue chips or staying away? Thanks for watching, and see you in the next video.